All right, welcome back, everyone. We're diving back in. It's amazing to think about all the stuff we've already covered together, from like the absolute basics of money and stocks to building a solid trading toolbox, the fundamentals. But today we're going pro.
That's right. It's about going beyond just buying and selling. Today's about the tools and, honestly, the mindset that separates the casual players from the real pros.
I love that. And what's super cool about this deep dive is that we're tackling both the stock market and crypto strategies. Because let's be real, things move fast in both worlds.
They really do. And that's exactly why we're not just focused on giving you knowledge, but like
Yeah.
real actionable stuff. We want you leaving this deep dive feeling confident and informed, not like, drowning in information overload.
So let's get right into it. You've got the basics. Now it's time to upgrade. First stop, technical analysis. It's time to sharpen those market detective skills.
I like that. Sharpening the detective skills. It's like the weather, you can't control it, but a good meteorologist, well, they can read the signs and give you a pretty solid forecast. Charts. Think of those as weather forecasts, but for the financial world. They're full of clues about what might happen next.
So we're basically becoming market meteorologists, huh? I like the sound of that. But instead of wind speeds and cloud formations, what kind of signs are we looking for on these charts?
Well, there are three key indicators that are like the bedrock of technical analysis. Candlesticks, moving averages, and the RSI, which stands for Relative Strength Index. You put these together and bam, you start making sense of what the market's trying to tell you.
All right, let's break them down one by one then. And honestly, let's start with those candlesticks. They've always kind of looked like, I don't know, financial hieroglyphics to me.
I get that they can seem intimidating, but they're actually simpler than you might think. So imagine each candlestick as a little story, a visual one, of how the price moved over time. Green, that means the price went up. Red, that means it went down. The length of the candlestick, that shows you how much the price moved. And the wicks, those little lines at the top and bottom, those show you the high and low points for that time.
Okay, I think I'm starting to see the story here. So what about those moving averages? What's their deal?
So moving averages, what they do is smooth out that messy price data over a specific period, helping you see the trends. We often look at the 50-day and the 200-day moving averages. And here's a fun fact. When the 50-day crosses below the 200-day, it forms what we call a death cross.
Death cross. Whoa, that sounds ominous. Are we talking like full-on market apocalypse here?
Okay, so maybe not full-on apocalypse, but it's definitely something to pay attention to.
Yeah.
Like, remember Tesla when it had that big drop back in 2022? Well, guess what? A death cross totally foreshadowed that decline. Those in the know, they saw it coming.
Wow. Okay, that's some powerful stuff right there. All right, last but definitely not least, we got the RSI, that relative strength index. What's this one telling us?
The RSI is all about momentum. It measures how strong those price movements are. And what that does is helps us figure out if something's overbought or, oversold. Think of it like a thermometer for market sentiment, how everyone's feeling about it. When it goes above 70, it's saying, hey, this thing's probably overbought, maybe time to think about selling. But if it's below 30, then it's more like, hey, this might be a good time to buy. It's probably oversold.
So like it's kind of like our buy low, sell high indicator?
In a way, yeah, you can think about it like that. But remember, it's just one tool in your kit. You got to use it with the other indicators, in your own strategy. Like think about Bitcoin in 2021. Remember when the RSI went up to like
Crazy.
crazy high, right? Well, then the crash happened. But people who saw that and sold, they totally dodged a bullet.
Okay, so we've got our market detective tools, right? We got those candlesticks, moving averages, and the RSI. But having the tools, that's only the first step, right?
Right. It's like owning a fancy sports car. Doesn't mean much if you don't know how to actually drive it, right? And in trading, knowing how to drive means understanding risk management.
Okay, let's talk about that. You mentioned risk management earlier. Why is it so important, especially when we're getting into these, advanced strategies?
Imagine this. You're going skydiving, but no parachute. Sounds crazy, right? Well, trading without risk management is like the same level of crazy. Yeah, you might get lucky a few times, but sooner or later, you're going to hit the ground hard. That's why we need safety nets.
Okay, I'm with you. So what are those safety nets in the trading world? What can we do to actually protect ourselves?
Right. Picture this. You're putting on armor. 3 essential pieces. Stop loss orders, position sizing, and those risk-reward ratios. These aren't optional. They're essential gear for any trader, from beginner to pro.
All right, let's break those down. First up, stop loss orders. What's the strategy here?
A stop loss order, it's basically your automatic safety net. It tells your broker, like, hey, if this stock drops to this price, sell it. Puts a limit on your potential losses. Think back to GameStop in 2021, all the hype around it. Without a stop loss, people lost a ton when the price just, like, plummeted.
Ouch, yeah. That's a lesson I'd definitely rather avoid. So stop loss orders, there are backup when things go bad.
You got it. Takes the emotion out when things get crazy. Next, we got position sizing, and this is all about diversification.
Diversification, so like don't put all our eggs in one basket.
That's the basic idea, but position sizing takes it further. It means you never bet more than a small percentage of your portfolio on a single trade, even if it seems like a sure thing.
So even if I think I found the next big AI stock, I shouldn't just go all in.
Nope, not even then. Even the hottest stocks can cool down fast. Spread that risk, protect your capital. That's the game.
Got it. Okay, now for those risk-reward ratios, this is where we really evaluate if a trade's worth it, right?
Exactly. Risk-reward ratio, it's all about making sure the potential reward is big enough to justify the risk you're taking. Aim for at least a 1.3 ratio. So for every $100 you're risking, you're aiming to make 300.
So the potential upside needs to be way bigger than the potential downside.
Right. It's all about balance. Think about the Dogecoin frenzy back in 2022, right? A lot of people chased that hype. And you know what? 90% of them lost money. Why? They didn't think about the risk reward, got caught up in the excitement.
Yeah, that's a good reminder that sometimes sitting on the sidelines is better than jumping into a trade. That doesn't make sense when you look at that risk reward.
100%. FOMO, that fear of missing out, it's a powerful force. But it can also lead to some really bad trading decisions.
Okay, so we've covered the technical analysis. We've got the risk management side down. What's next? What's the final piece of the puzzle when we're talking about leveling up our trading game?
And this might be the most important piece of all. Trading psychology. Time to talk about the elephant in the room, our own minds.
Ooh, this is where things get interesting. Because let's face it, we're human, not robots. So how do our emotions, actually affect our trading decisions?
A lot of times our biggest enemy in trading isn't the market itself, it's us. It's letting emotions like fear and greed cloud our judgment and make us do impulsive things.
Oh, tell me about it. Remember that time I panic sold on my tech stocks? And then, of course, they rebounded like crazy. Ooh, talk about letting fear take over.
We've all been there. The trick is to recognize those patterns, those emotional patterns, and have strategies to deal with them. Let's talk about 3 big ones that can really mess things up, even for experienced traders. FOMO, greed, and the lack of self-awareness.
All right, let's start with that FOMO, the fear of missing out. We've all felt it, right? That urge to jump into a trade just because everyone else is doing it. How do we avoid falling into that trap?
Remember Bitcoin when it hit $60,000? So many people just bought in because it was skyrocketing, not because they really understood it. FOMO, it usually ends up with buying high and selling low. And that's the exact opposite of what we want.
Right. It's like going to a concert just because it's sold out, even though you don't even like the band. You just end up miserable and wishing you had your money back.
Exactly. Now let's talk about greed. It's the other side of that FOMO coin, just as dangerous.
Greed. So wanting more, even when it's time to take those profits and walk away.
You got it. Nobody ever went broke taking profits. Greed makes you hold on too long, hoping for even bigger wins, and then boom, the market turns against you.
It's like hitting the jackpot on a slot machine, but then not cashing out, thinking you're on this lucky streak that'll never end.
Perfect analogy. All right, last but not least, self-awareness.
Okay, self-awareness. How does that tie into trading?
It's all about knowing your own emotional triggers. What makes you tick? What makes you make those trading decisions? And a great tool for that is journaling. Write down every trader, why you did it, how you were feeling, and then what happened.
So we're analyzing ourselves, looking for those patterns, do I always panic sell when the market drops 10%? That kind of thing.
Exactly. When you know your tendencies, you can start working on your weaknesses and making those decisions based on reason, not just emotion.
So it's like being our own therapist, but for trading. We've got our tools, our risk management strategies, and now we're tackling that mental game. This is powerful stuff.
And remember, it's a constant process. The best traders, they're always learning, adapting, always improving their game, both technically and mentally.
All right, so much great information. Let's pause here for a moment, let everything sink in. When we come back, we'll dive into some real-life examples, see how these advanced tactics play out in the wild world of the market. Stay tuned.
Okay, so let's jump back into those trading brains, shall we? But before the break, we were talking about mastering those emotions, right? But, even the calmest trader out there They still need the right information. And that's where some of these more advanced tools really come in.
Okay, you've got me hooked. We were just talking about technical analysis, right? So are we talking even fancier charting techniques now? Give me the good stuff.
Oh, absolutely. We're going deeper. So one of the sources we looked at, it actually dives into this whole world of algorithmic trading. It's pretty wild, computers making those split-second decisions based on, like, pre-programmed rules and market data.
Algorithmic trading. Okay, that sounds like straight out of a sci-fi movie. Are we talking like robots taking over Wall Street?
Well, not quite robots taking over, but it's definitely a game changer. Imagine a system that can, like, analyze tons of data, spot those patterns, and then make trades in, like, milliseconds. That's the power of algorithmic trading.
Okay, that's seriously impressive, but also a little intimidating, if I'm being honest. Is this something that, us regular traders can even use?
So building your own trading algorithms, that definitely takes some serious coding skills.
Mhm.
But even just understanding the concepts, like how they work, that can give you a real advantage.
Okay, so how do we, like, apply those concepts without needing a computer science degree?
Well, think back to when we talked about technical analysis. Algorithms, they often use those same indicators, those candlesticks, the moving averages, RSI, but just on a much bigger scale and way faster.
So it's like our market detective toolkit, but on steroids.
Exactly. Okay, so let's switch gears for a second and talk about crypto. This other source, it really emphasizes how important it is to understand tokenomics, basically the economics of a specific cryptocurrency.
Tokenomics, okay, that's a new one. So is that just like the price of the token, or is there like more to it?
Oh, it's way more than just the price. It's kind of like, researching a company before you buy their stock. You got to understand what it does, its technology, its team, the community around it, like the whole picture.
So it's like doing your due diligence, but for crypto.
Exactly. You got to look beyond the hype and see those fundamentals, those underlying factors. What problems this token solving? What's it actually used for in its ecosystem?
Okay, I see it's not just buying whatever's trending on Twitter, right? But speaking of new and exciting, this source also mentions something about decentralized finance.
Yeah.
DeFi. What's that all about?
DeFi, it's like this whole other financial system built on blockchain technology. It's got some really cool ways to earn passive income, things like yield farming.
Yield farming. All right, now you're talking my language. Tell me more.
Imagine earning interest on your crypto, but instead of a bank, you're using these, like, decentralized platforms and protocols. That's the basic idea of yield farming.
This DeFi world, it sounds pretty amazing, but also, like, really complex. Are there any risks I should be aware of?
Definitely, there are. DeFi is still pretty new. It's always evolving. You really got to understand the risks, especially around security and volatility. The source we were looking at, it stresses how important it is to stay up to date on all the regulations because they're always changing.
It's like the Wild West out there, but with, like, digital cowboys and code instead of horses and guns.
Uh-huh. That's a great analogy. All right, let's circle back to something we talked about earlier, risk management. One of the sources we looked at, it uses this really powerful analogy. They compare trading without risk management to skydiving without a parachute.
Okay, yeah, that image definitely got my attention. So we already talked about, like, stop loss orders, position sizing, and those risk reward ratios. Is there anything else we can add to that safety net?
So this source, it actually goes into some more advanced stop-loss strategies. Something goes beyond just a simple price trigger.
Advanced stop loss orders. What makes them so different from the regular ones?
Well, imagine a stop-loss order that, like, adjusts itself based on how volatile the market is, or even the time of day. You can really customize these advanced orders, make them fit a bunch of different factors. It gives you more flexibility and control.
So it's like a super smart parachute that, like, automatically adjusts based on the win.
You got it. It's all about using technology to make your risk management even better.
That's awesome. Okay, so what other advanced risk management techniques can we add to our toolkit?
This source we looked at, it highlights position sizing strategies. It's all about figuring out exactly how much capital to put into each trade based on, how much risk you're comfortable with and the specifics of that particular trade.
So it's not just about diversification, but also about, like, how much we're actually betting on each trade.
Exactly. You might be super bullish on a stock, but if it's like a really high risk, high reward situation, you might only put in a small percentage of your portfolio, less than you would for, like, a stable blue chip stock.
Okay, yeah, that makes sense. Balancing risk and reward, but in a more, like, thoughtful way. Any other advanced risk management tricks up your sleeve?
Right, last one, This source introduces the idea of adaptive strategies. It's all about constantly watching your trades, analyzing how they're doing, and making adjustments as you go, based on how the market's doing and what you're learning along the way.
Adaptive strategy. So it's not just set it and forget it. We got to actively manage those trades and like evolve our approach.
You got it. The market's always changing, it's dynamic, and the traders who win, they're the ones who are constantly learning and adapting their strategies.
It's like surfing. You got to ride those waves and adjust your stance to stay balanced. You can't just stand still. This is starting to feel like, I don't know, a high-stakes chess game. Every move matters. So what are some tools and resources that can help us make those strategic moves?
Well, one source, it recommends using platforms like TradingView. It's got all these advanced charting tools and tons of technical indicators. It's like having a whole professional trading desk, but right there on your computer.
TradingView. Oh, yeah, I've heard of that. It's a popular platform, right? What makes it so special?
TradingView, it's really powerful. It's great for beginners and pros. You can create your own custom charts, backtest your strategies, and even connect with other traders, share ideas and insights. It's a whole community.
This sounds like a great way to learn and connect with other traders. What about for crypto specifically? Any recommendations for navigating that world?
Absolutely. There's this source that suggests using tools like CoinMarketCap and DeFi Pulse to track what's happening in the crypto market, like price movements and liquidity trends. It's really helpful.
CoinMarketCap and DeFi Pulse, are those like the Bloomberg terminals for crypto?
Think of them like real-time dashboards for the whole cryptoverse. You can track prices, volumes, market cap, even all the latest stuff happening in DeFi. It's a great way to stay informed.
Wow, okay, we have covered so much in this section. Algorithmic trading, tokenomics, DeFi, all these advanced risk management techniques, even specific tools and resources. I feel like my head's spinning a little.
It's definitely a lot to take in, but remember, it's all about building your knowledge and skills step by step. Don't
Yeah.
feel like you got to master everything all at once.
Okay, that's good to hear. It's a marathon, not a sprint, right?
Exactly. Now, to really make sure all this sticks, let's look at some real-world examples, some case studies. Let's see how these advanced strategies actually play out in the market.
Case studies, I love it. It's like getting a front row seat to watch the pros, see what works, what doesn't. I'm ready to learn from their wins, and maybe even more importantly, their mistakes.
Okay, let's get into those case studies. It's like, peeking behind the curtain and seeing how the pros really do it. I'm all ears for these wins and, maybe more importantly, learning from those mistakes. So there's this one case study. It's pretty interesting. It talks about this trading firm that used, algorithmic strategies during this crazy market shift. It was triggered by like a huge regulatory announcement. And guess what? They were able to react super fast, like instantly, and they minimized their losses.
Wow. So it wasn't about like knowing the announcement was coming beforehand, but more about having the right systems in place to, adapt on the fly.
You got it. Adaptability is key. They had the tools, the technology to just execute that strategy with precision, especially when the market's going haywire. And this source also makes this point that, like, even when you're winning, even when things are going great, you can't just sit back and, coast. The market never sleeps. You always got to be learning, always growing.
Learn, adapt, repeat. I'm hearing that loud and clear. But let's bring it back to, us individual traders. How do we apply these concepts without a whole team of programmers and like supercomputers at our disposal?
That's the million-dollar question, right? So this source we looked at, it breaks it down into three main takeaways. First, even if we don't use algorithmic trading ourselves, understanding how it works, the principles behind it, that can really help us make better decisions.
So even if I'm not building like trading bots or anything, just knowing how they work gives me an edge. Okay, I like that. What's takeaway number two?
All right, takeaway number two, it's all about crypto. So exploring those opportunities in DeFi, like yield farming, that can open up some serious income streams. But always do your research first. Understand those risks, don't jump in blindly.
It's like a new kind of gold rush, but instead of picks and shovels, it's all about knowledge and being tech savvy. Okay, last takeaway. The one we should all, like, tattoo on our trading journals. What is it?
Takeaway number three, the big one. Effective risk management, and this is so important, a solid trading psychology. That's the foundation, the bedrock of long-term success.
It's like having a Ferrari with no brakes. You might go fast for a bit, but you're going to crash eventually, right? This has been an awesome deep dive. We've covered so much ground from, those basic trading concepts to some really sophisticated strategies in both the stock market and the world of crypto. It's been wild.
Totally. We explored technical analysis, got into the nitty-gritty of risk management, even went deep into that whole psychology of trading.
And mastering these skills, that gives us a huge advantage. But as we've learned, no strategy is perfect, right? The
Yeah.
key is to never stop learning, never stop practicing, and always, always be refining our approach.
So as you're out there, on your trading journey, think about this. Of the three technical indicators we talked about, the candlesticks, the moving averages, and the RSI, which one kind of speaks to you the most? Which one are you most curious about? Explore it, test it out, see how it fits into your overall strategy. That's your homework, your challenge as we wrap up this deep dive.
I love it. A little challenge to keep us all thinking and engaged. And to everyone listening, keep diving deep, keep exploring, keep leveling up that financial game. We'll see you next time.